Hi there, a very good morning to all our viewers who've joined us live on this broadcast of Money Control. You're watching Opening Bell with me, Stacey Pereira, and I'm here to take you through all those news and cues you need to be watching out for that could go on to impact your trading day. So let's get a quick recap of where we left off before this holiday that we saw. Well, we did see the Nifty kind of take a U-turn in that last hour of trade, hitting new highs, but then consolidating, or rather we saw profit booking to close finally at 22,604. Now, can we move upwards from here? Well, there are a lot of global cues that could suggest that we could see newer highs, but also the fact that there could be consolidation before we hit that next bull run. If you look at the global handover, well, that does seem like it was quite mixed because the US markets did close in the negative, whereas the Asian markets are trading quite mixed at this point after the Federal Reserve came out to maintain a status quo, kept rates unchanged for another round where we go on to see maybe those rate cuts might take a bit longer than what was anticipated. We'll talk about all of this in details with our guests, but first let me take you through all the top headlines. Now, the US Federal Reserve held rates steady and rules out any rate hikes as the central bank's next move, despite few signs of progress on inflation. Easing stocks close mixed on Wall Street, whereas Asian markets trade largely lower, while the GIFT Nifty is also suggesting a mild opening for the Indian markets. Now, crude prices also corrected as the US stockpile surged. WTI crude hit a 7-week low, while Brent trades around $83 a barrel. In one of the largest and most complex family separations in corporate India, the Godrej family has reached a settlement after 5 years of hectic negotiations. Adi and Nadir Godrej will retain control over Godrej Industries and its listed entities, while Jamshed and Smita Godrej will take over ownership of the unlisted Godrej and Boyce affiliates along with the land banks in Mumbai. Sources indicate that the enterprise value of the family ownership of the group is worth close to $20 billion. And automakers are reporting a mixed bag of sales for the month of April. Sales have disappointed for Maruti Suzuki as well as Eicher Motors, while TVS Motors has registered a 25% uptick in their sales growth, beating street estimates. Tata Motors passenger vehicle sales too have come under pressure, while the commercial vehicle sales have remained quite strong. And KVS Money has resigned as the director and key managerial personnel from Kotak Mahindra Bank after a 29-year stint. Well, in other key earnings to watch out for, you can look out for Adani Enterprise, Adani Ports and SEZ, as well as Coal India and Federal Bank, which will be coming out with their Q4 numbers. Well, just about 10 minutes to go for a market open, and we'll see whether we are headed to new highs. But that will, the direction is really going to come from what traders are expecting. The word on the street mostly is the fact that maybe perhaps look at a buy on dip strategy, because that will still give you an entry to a market that is controlled by the bulls in the long run. Well, with whether that is a strategy you would want to take up, our experts on the show will definitely help you with that. But before that, let me also take you through a couple of F&O cues that you need to keep your eye out for. Now, if you look at the F&O cues, there was significant call writing that was observed in the 22,800 strike on the Nifty 50, whereas the put riders did cut their exposure down to that 22,700 strike. This especially today being the last day of expiry, so it will be interesting to see the activity that comes out there for the Nifty 50, at least ahead of this weekly expiry. Now, if you look at the Nifty put call ratio, the PCR that indicates this mood, it really shows it has seen a drop of about 1.11 from the 1.23 levels that it saw on April 30th. For the stocks that are on the F&O ban list, well, NSE has gone on to retain both Biocon as well as Vodafone Idea on that F&O ban list for May 2nd. So that's the two stocks which will not be trading, at least in the F&O segment. Well, they will be there in the cash segment. As for the fund flows, well, we did see about FIIs buy about 1,071.93 crore worth of shares on April 30th, whereas DIIs also did the equal bit of pumping in, bringing in stocks worth of 1,429.1 111 crore on April 30th. So that is the provisional data that has come out of the fund flows. So you can say that, DIIs and FIIs both participating in equal number. If you look at the stocks that will be in focus in terms of their Q4 earnings, you do have Coal India, Adani Enterprise and Ports, also Dabur, Coforge, Federal Bank, Blue Dart, CEAT among few of the others that will be putting out their Q4 numbers. Now, another interesting factor is the volatility index, because that one again has seen quite a bit of surge after that, pretty much plunge that we saw at the start of the week or the previous 5 sessions to go by. Well, it has seen a significant surge, and also this rather has put the bulls in an uncomfortable position right now, because just when we hit elections, the first waves, we saw that whole crash coming there for the VIX, whereas now the fear index has jumped by about 5.2%, standing somewhere at 12.87 levels as of April 30th, and this is almost a 26% jump in just that last 5 session. Maybe it's just recovering from that plunge that we saw earlier, but we could really, that is a word of caution rather, because this is the fear gauge that people go by, or perhaps just something to be watching out for. But let's discuss all of this and more on the stocks that are likely to be in the spotlight today. And for that, joining me is Nirav Harish Chedda. He's the Assistant Vice President of Derivatives and Technical Research at Nirmal Bang. Good morning. Good to have you with us on the show. Let me first just go up with what the charts are really telling about the Nifty at this point. Are we likely to hit that 23,000 mark by at least next week? Is that somewhere close?
Yeah. Hi, Shani. See, at this point of time, Nifty chart is very positive. No doubt we've seen a bout of selling pressure in the previous trading session. But overall, the chart is positive. We've seen all-time highs being crossed in the previous trading session. And the data, as you said, the PCR is at comfortable levels. The VIX is increasing. It is supposed to be increasing as well because of the election data. But it is still at comfortable levels, and we do see open interest being quite low. So definitely, I think 23,000 can be reached, and probably it can be reached in the next couple of days. We are bullish, and we believe 23,000 will be claimed, and post that probably even higher. But yes, one should be buying on dips. 22,500 is a very strong support area now, and that should be your stop loss for longs from a near-term perspective. Even Bank Nifty, if you see Bank Nifty, and for that matter, is much more stronger now. It consolidated when Nifty was making new highs in the previous month, and now you've seen Bank Nifty taking over, and this is the stronger of the two indices now, and we believe this can claim about the 50,000 levels. Probably go towards 52,000 level. So at this point of time, we are more bullish on Bank Nifty. You can look to buy Bank Nifty at current levels, and on declines up to 49,000, 48,800. 48,000 is a very strong support area now, and that should be your stop loss for longs from a near-term perspective. The first real resistance would come in around the 50,000 levels, and then I think 52,000 level will be crossed above.
Nirav, do stay on. Let me just get our viewers up to speed with a couple of the auto sales numbers that have come trickling in all of yesterday. Now, we did see Maruti Suzuki, which put out a total sales for the month of April, rising by about 4.7% and coming in at 1.68 lakh units that they have clocked in. Well, they do see a tepid domestic passenger sales growth, but their total production for the month has increased by 17% on a year-on-year basis. Now, if you look at the same thing for Eicher Motors, well, Royal Enfield sales are up by 12%, coming in at 81,870 units, whereas their VCCV, that is the commercial part of it, there they are seeing a drop of about 18.1% at just about 5,377 units. Now, if you look at Tata Motors, that one has recorded about 11.4% growth in its total sales, coming in at 77,521 for April. But for Tata Motors, it's interesting to see because their commercial vehicle sales have seen a good jump of about 31% on a year-on-year basis, whereas the passenger sales have risen just marginally by only about 2%. Now, whether this is only because of their EV sales, that is something that is going to be in focus as well. Let's also shift focus towards the two-wheelers then, where you're seeing TVS Motors, which is quite the outlier, one would say, among these that have put out their numbers so far. They've seen a good jump in their total sales of about 25%. They're also seeing their exports growing by about 12%, coming in at 80,508 units. But they are also reporting a drop in their three-wheeler sales, which is down by about 21%, coming in at 9,023 units. Neera, quickly to you, do you think we are going to see much traction in that Nifty auto index and the different components? Are we seeing higher highs back again there for the Nifty auto? If you see the last session, it was pretty much the auto names that were at the top of the gainers list. Do you have any specific picks within this lot, and how are you viewing the Nifty auto index?
Yeah. So see, auto index has always been the first one to move up, and we've seen a tremendous rally in the auto pack as a whole. But now the other sectors are catching up, and we are seeing money flow out of the auto index at this point of time. So yeah, probably you can see a near-term rise of about 2 to 5%, but I don't see a bigger rise at this point of time in the auto index. So I would suggest if you bought it, some time back, this would be a good level to book some profits in the auto pack and, move to something else at this point, something like an oil and gas. With the oil now coming down. So, at this point, most of the stocks are near their resistances, and not one stock I really like from the two-wheeler or four-wheeler space at this point of time.
Right, so no picks coming in there for Nirav, at least from the auto space. In fact, he's rather suggesting you could be booking profits, at least from the Nifty auto index. But let me also speak about the broader perspective. Today, of course, the markets globally are reacting to what the Federal Reserve has gone on to do. They have maintained status quo, and that was pretty much factored in. But how much of that impact is it going to change? Has the, the commentary really made a difference? Is it more dovish that we could actually now expect those rate cuts? And of course, there is that signaling also that there's perhaps no hikes in the offing. So how much of that is really going to change for us here in India and also globally? Well, joining me now is Peter Cardo. He's the Chief Market Economist at Sparta Capital. Good morning, Peter, and so great to have you with us this morning. Well, like I was mentioning, what Jerome Powell has gone on to do has pretty much been in line, or rather factored in, we would say. Would you also, keep the same stance that they want to come down to that 2% inflation levels and only then things would change, and that means that we need to, the higher for longer is going to be the way forward?
Yes, there's no doubt about that. But of course, the key point here was the fact that he seemed a little bit more dovish than what the communique indicated, because in fact, I would say that the communique was on the hawkish side, because they continued to talk about 2% inflation. But the fact that he basically ruled out a rate hike this year took me by surprise, because some of the latest macro indicators that we had, especially the cost inflation index, showed that wages turned up again, and that could be a problem again, for the fight against inflation. In fact, Powell pointed that out, that the inflation fight has been not that successful in the first 3-4 months of 2024. So I think that the possibility of a rate cut probably in the fourth quarter does exist if in the second half of the year we see inflation to come down. Now,
Right.
we don't expect inflation to get to 2% this year, that's for sure. But if it goes in that direction and reverses the course that we're in now, then I think we can have one rate cut, and it'll probably happen in the fourth quarter of the year.
Right. Peter, do stay on. We will get into discussing the contours of what this really means and what the Fed is trying to signal out there. But first, let me address market opening for you. We are pretty flat, we would say, but managing to hold on to that 22,650 odd levels. So that being some solace, we would say, on the street, that we are opening in the green despite the global markets not really supporting or didn't really show that much of positive reach. Now, if you look at the sensex, that one too gaining about 150 odd points. So there you see both the benchmarks at least comfortably in the green. Your broader indices also holding up, 0.5% odd gains for the Nifty mid cap index at this point. The small cap also close to 0.5% of gain. So both of them seeing better traction compared to the benchmarks for now. Your your bank Nifty, I beg your pardon, is also there in the positive, hovering around those 49,500 odd levels, we would say. So just about 0.1% higher, but that's the bank Nifty. Also the IT index, now that one trading rather flat, we would say, but with a negative bias this time for the IT index, perhaps reacting to what the Federal Reserve and how that really comes out to play for the IT pack. Nifty Pharma also in the green at this point, so 0.3% of gain for the pharma index. You can see even the advanced decline ratio quite positive at this point. So there is that bullish sentiment at least on the street, but a couple of stocks that could be in under pressure. The FMCG pack also there seeing some good amount of gains. So FMCG consumption, both those baskets today. You do have Dabur, which will be coming out with its earnings. So that will be something that the street could be watching out for from within this space. Metal index also 0.5% of gain coming in there for the metal index, and a lot of activity happening there around Jindal Steel, Tata Steel and the like. So perhaps all of that news flow auguring well for the metal index. Auto, like we were talking about, that one also seeing some good gains. Of course, all of these auto sales numbers that we just spoke of, all of that also reflecting here on the Nifty auto index. Let's also look at the components, really the ones pushing these indices up, and you can see on your screens the gainers there, BPCL, M&M. Once again you have Power Grid again there. All of these pretty much been there in the last two sessions as well. Bajaj Finserv, Adani Enterprise ahead of its earnings, so as Coal India reacting to those earnings perhaps. Hero MotoCorp, JSW Steel as well as Tata Motors are among your gainers in trade. So it is interesting to see that pack, but you also have the laggards now there on your screen. Kotak Mahindra Bank once again, and we'll be talking about that because there are a couple of downgrades that have come in from brokerages on this one, especially after news of another resignation in the top management there. Hindalco, Maruti Suzuki also reacting to those numbers where they've not seen a good output from its total sales in the month of April. Bharti Airtel, Wipro, TCS are the other ones making it to the laggard list. Infosys, another one from the IT pack, Divi's Lab as well as Tata Consumer Product. They're among those that are seeing some bit of negative sentiment at this point. Let me go back because I had to cut off Peter there. Peter, once again to you, since we are still talking about the rate cuts, and you just happen to mention that perhaps maybe just one rate cut is what you are looking at, and maybe that could also come by the end of this fiscal year. Are we, does that change much in terms of how things would play out? Is there enough reason to worry, or because Fed Powell had already suggested that there could be rate cuts, we could see that happening in a more faster pace and coming in close to each other?
I mean, that possibility exists, but if you look at the macro data, of course, we had some macro data that suggests that things are maybe reversing again, and I'm referring to the ISM PMI, which actually contracted, and so that was a reversal from what we saw over the past 2 months. Now, it all depends on inflation, and of course, it all depends on the economy. I suspect that there is no danger sign of a soft landing reversing at this point. And of course, the labor market remains pretty much tight. In fact, we're headed for another labor report on Friday, and I don't think it'll be too hot, but I don't think it'll be too cool. So I don't think there's going to be any major changes in terms of the labor market. So there are factors, but I will say this: another point that I thought was a positive signs in terms of yields probably backing off from the high levels here was the fact that Fed Powell mentioned that they're going to scale back on this on their on the sale of their assets, and that is positive because that should relieve some pressures in the bond market. And of course, we're still subject to the macro data, but that's a plus. And in fact, the yields came off of their highs on that news.
Right. So the cooling off of yields could perhaps be a reprieve for traders there in the US or even others that are looking at that treasury, the US treasury bond and the trade for it. But let me just also address a couple of other stocks that are in focus, and we are seeing a lot of metal names there, that index also trading and propping up quite high. Now there is news that is coming for Jindal Stainless, and this after the steel manufacturers said that they are going to buy 100% stake of Sulawesi Nickel Processing Industries, or SNPI HPL. This is based out of Singapore, and they're going to be doing this deal 100% stake sale buy for about 715 crore rupees. This now SNPI HLP will go on to form a joint venture by acquiring 49% equity stakes in another Indonesian-based operating company of theirs that has an annual production capacity of 1.2 million tons. Now, the company has also said that they will go on to invest about 3,350 crore towards the downstream capacity expansion of their Jaipur plant and also upgrade the infrastructural facilities there. They will also be acquiring a 54% equity stake in Chromeni Steels. Now, this is through the acquisition of that 100% equity stake of Evergrande International Investment. This is also a Singapore-based company, and post this acquisition, it will become a step-down subsidiary of the company. Now, the management has also spoken about this, and they've said that this whole Indonesian facility will now come into operation or become operational in another 2 years' time, and they expect that melt shop to come up in Indonesia and the downstream expansion in Jaipur to happen over these 2 years. Well, this Indonesian venture is also quite a simple play and plug model is what the management is saying, and also the initial 100 crore investment should be sufficient to start that melt shop in Indonesia. Well, that is about Jindal Steel. But Nirav, come in here. Do you think this kind of, the movements that we are seeing within the metal space, is there enough room for people to enter there? And do you have any particular picks that you like within the space? Is it the ferrous or the alloys? How are you looking at the whole metal space?
Yeah. So see, most of the metal names, especially the steel makers, they were in a consolidation for the last couple of years. And post that we've seen in the last 3-4 months, 5 months, most of them have broken out. So yeah, there are names that I really like. But as a whole, the metal stack should move up. So, something like a SAIL, a Tata Steel, a National Aluminium or a Hindalco should do well. The larger names, these names should, move up quite significantly because the 2-year consolidation breakouts have come in. And I expect them to at least move up another 20-25% from current levels. If you ask me for one pick, that would be SAIL. because this is a 10-yearly breakout that has come in for the stock, and now the next targets that I really see in sale are around 200 to 25 odd levels, and that can be a significant upside from current levels. So yeah, I think one should invest in metals at this point, and you can stand to gain, a very decent amount. The second name that I would like to say is Hindalco. Why? Because this was in the news for some wrong reasons, but now it has moved up above its all-time highs, and even a two-yearly breakout along with that has come in. So yeah, Hindalco also can go up above that 750, 800 odd level. So yeah, these two names I believe can be the leaders in this metal rally, and probably lead this rally for the next 3 to 4 months.
Quite interesting picks there within the metal pack from Nirav. But Peter, back to you. Do you think foreign investors are yet to show that strong participation in the manufacturing space in India? We are sitting, just before the general elections. Do you think they're playing the wait and watch game, or are we likely to see, with whatever's transpiring in the US, does India still hold out and will be a space that we're going to see FIIs flocking into?
I'm not really too sure about that, but the bottom line is, like I said, if we get a relief in inflation, that will spell relief more or less on a global scale. In fact, if you look at Europe, inflation has not been moving higher. And so if we come down in inflation, I think that affects most of the industrial countries and some of the third world countries as well.
Right. Well, Neera, I'm going to try and get a couple of queries answered by you. Well, we do have Reena Kumar, who's asking the fact that she holds about 2,233 shares of Asian Granito, which she had bought at an average buying price of 108, and this was allotted through a rights issue. It is now trading at about a 40% loss, she says, for the last 2 years. She's asking if there's any hope of recovery or when would be a good time to exit.
Yeah. So yeah, see, I believe this stock has underperformed for quite some time, from some 500 odd levels from 2017 odd. This stock continues to underperform. But the good part is the volumes are back in this counter. Also, there is some smart buying going on, and the overall chart has become bullish. No doubt it has come down again from sub 80 odd levels, but I believe this stock can move up above the 100 levels. So I would suggest you can buy some more shares at current levels. You can keep a stop loss of 50 for all your shares. If it goes below 50, just exit it, but I don't think it will do that. I believe it can go up above that 110 or 120 odd levels, and you can probably stand to gain if you average at current levels.
Right. Interesting there. Well, let's also talk about Godrej Industries, because that is a group, that is a stock that will be in focus today. Now, this after the Godrej family has reached an agreement to split the conglomerate into 2 branches. Now, Adi and his brother Nadir are going to be keeping the listed entities, while their cousin Jamshed will get control of the unlisted companies as well as the land banks, as per the pact that has been shared with stock exchanges on April 30th. Now, the agreement has also been submitted. The agreement also addresses the issue of royalty, of brand usage, as well as the land bank developments. Now, of course, post this reaching exchanges, we did see a couple of brokerages that have come out with reports. CLSA has put out a report on Godrej Properties, which is a part of the listed entity from the group, and they have a sell call with a target price of 2,100 per share. They also say that the Godrej and Boyce, that one which owns that Vikhroli land, could be under development and they could see a restructuring that could lend more clarity on that particular land bank. They have anyways ruled out any option value. They have maintained this sell for Godrej properties on the back of this rich valuations. What is interesting is to see how it really plays out. There are still a lot of unanswered questions, how exactly this split is going to play out. But it is quite interesting because this being, after 5 years of negotiation, you're seeing some bit of understanding, at least a settlement that is being reached into. But Nirav, on the Godrej Industries front, this of course being the holding company and Godrej Properties, Godrej Consumers and the likes coming within it, do you think there is some room there? Is this good news? Are the street really, were they waiting for something like this, and how does it really impact the different stocks within the holding company?
Yeah, more or less, I think the chart really tells me, something good is going on. A 7-yearly breakout has come in Godrej. So whenever, such multi-year breakout comes in, it's not that 10-20% the stock will move. The stock generally moves up about that, 50, 70, even 100% after that breakout. And that breakout has come in around 720 odd levels. I believe this stock has it in it. To move up towards that 1150, 1200 levels. The pattern is very good. Also, just recently in this week, it has witnessed a flat kind of a formation breakout on the near-term charts. So I definitely believe from a near-term perspective as well, 1100 is achievable. So look at buying the stock at current levels, and on declines, your stop loss would be around 920. And 1100 is where you start to book profits.
Right, interesting. So they could actually go on to buy Godrej at the current levels. But Peter, before I let you go, one last question to you. We are sitting in the middle of a good earnings season as well, and we've seen at least the tech names in the US come out with some positive numbers so far. AI really driving growth for most of your big tech names so far, and we've seen the stocks also perform in that way post those earnings numbers. Do you think it's going to be a good Q1 for at least the American companies so far? How are you rating this whole earnings season going by?
Yeah, so far, we're more than halfway through the earnings season, and they've been surprisingly good. Sure, there were a few misses, but by and large, they've been okay, and that suggests to me that the earnings rally, which was interrupted because of the of yields moving near their 52 weeks high, that is the two-year Treasury note did move above its 52-week high, and that of course put pressure on stocks, and the good earnings news was basically ignored. But I think that with the Fed focus now taking a back seat, I think that the earnings rally is going to restart, and I think May is probably going to be a good month for stocks, and I wouldn't be a bit surprised to see the S&P 500 move towards the high levels of its 52 weeks highs.
Right, so fresh highs for the S&P 500 is what Peter is eyeing, at least with what the earnings in the US are looking like. But thanks so much, Peter, for giving us your time and speaking with us here. Let me go back to Nirav then and get a couple of more queries answered. Nirav, Naveen is asking your view on Sona BLW, and in fact there are also a couple of brokerages that have come out. They just put out their earnings in the last session. There is Nomura has a buy call with a target at about 775. They say a strong performance with a tough quarter. They've gone on to beat that consensus with higher revenues as well, and they have their lower FY25-26 revenue estimate. They've lowered their revenue estimate by about 10% and 4% for FY26. What would be the view, or rather what are the charts suggesting for Sona BLW?
Yeah. So this stock is one stock which was moving in a higher top, higher bottom formation, and an upward sloping trend line. It was taking support from there, but that trend line has been broken on the downside at about 660 odd, and I believe this is a small negative. The stock can remain underperforming. It can probably come down towards that 550, 540 odd levels, and post that, some buying can go in. But at this point, from a technical perspective, looks a little weak. I would avoid buying fresh at this point of time.
Right, so avoid buying fresh. In fact, even the stock is trading at about 37 times their FY26 earning per share, which might be attractive, but maybe, you wait a bit is at least what Anita was suggesting. Let's also look at a couple of more brokerages that have come out with reports on Kotak Mahindra Bank. Now remember, there is news of KVS Manian. He has resigned as the director and key managerial personnel from Kotak Mahindra Bank, and after serving for 29 years. Now Nuvama has come out with a report. They've gone on to downgrade Kotak Mahindra Bank, and which is why we've been seeing that bank there in your laggard list for the past 2-3 sessions at least, even after the RBI curb that came in, that really putting all that pressure on Kotak Mahindra Bank. But this time there is a downgrade which is coming in from a buy to reduce. The target too has been cut to about 1,530 per share from the 2,095 that it was earlier. They've also gone on to say that it's coming on the back of the negatives. Of course, this resignation also playing in. All of these senior exits will be bunched up, in fact, over the next 6 months, they see. And the recent changes shall go on to hurt that growth as well as profit in the next 12 to 18 months. Macquarie, on the other hand, maintains a neutral call for Kotak Mahindra Bank, but their target price is now at 1,860. They do say that these uncertainty within the management is a problem that will continue to pile up. Also, the resignation could be either for Manian to join Federal Bank or Bandhan Bank, and this is based on media reports is what they're reading out. Well, Federal Bank will be coming out with their numbers later today, and we are going to hear from the management, so perhaps this could be a question that would be posed to the management as well there. But we will be getting you details of the Federal Bank's Q4 numbers as well. A couple of more queries. Let me get Nirav to answer, because that will help our viewers. And also let me ask and request our viewers to continue sending in their queries, so that we have our experts here who can address them for you. There is a query coming in on Castol India. Nirav, what would you be suggesting, especially with a long-term perspective? Alex wants to know.
Yeah, this is one stock which has underperformed in the longest time, and finally it is finding some traction, in the last 3 to 6 months. From sub 100 levels, this stock has doubled. Volumes have come in, so definitely it's a good stock for the long term, and also on the longer term charts, it's making a rounding kind of a formation, which is a strong pattern. So it should slowly and steadily reach 250. Once that 250 level is broken, you can expect the stock to be very aggressive on the upside, and it can probably then move up above that 320, 350 levels. But at this point, from a long-term perspective, 250 is the level you should be looking at, and book some profits there, because that's a long-term resistance zone. It might take some breaking out above that 250 levels. Your stop loss for the same should be around 182.
Right. Another quick query there coming in from Yagnesh. He wants to know your view on Colgate and whether he can enter fresh into this counter anytime now. What is your view on Colgate?
Yeah, so this is one stock which has a tremendous rally. This stock has been moving up since 2004, slowly and steadily. The stock has moved up, in the last 3 to 6 months as well. From 1500, it's almost doubled, and no one really, looked at the stock as well. I think one can look to buy at current levels, yes. But keep a 3 to 6 month perspective where the stock might just consolidate for a bit, but slowly and steadily it should reach about 3,500 odd level. That should be your target. And do not look to trade in this counter, because this is not one of those trading counters. It does consolidate for about 4 to 5 weeks and then probably breaks out.
Right. So, well, I hope that answers your query there. But we're completely out of time this time around. But do keep sending us your queries, and we'll try and have them answered. Let me thank Nirav Chedda once again there for helping our viewers with their queries and also giving us a perspective on other stocks and sectors that you could be looking out for. Well, markets are trading rather flat, we would say at this point. Nifty 50 around that 22,600 odd levels. The sensex also just about 150 odd points, and we have to wait and see what really is going to push markets. Whether we manage to touch a new fresh high intraday is something that we're going to keep our eye out for. But for now, it's a wrap and goodbye from the entire team that puts this piece together. Thank you so much for watching. Do post us your feedback in the comment section, and also follow us on the link at the bottom of your screen. And for all your other updates, stay tuned to moneycontrol.com as well as the Money Control app.